Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, today we're going to do an update to the Las Vegas real estate market. This is the most accurate information just came out, basically. And as you can see, we're not in the office still.
Right.
Still not in the office.
Right. So special thank you today to Tammy and Mike for helping us do this video.
Okay. All right. So we're going to start with Market Action Index. This is the thing we always track. It was 44 last week. It's 45 today. It's gotten hotter. We're going to show you another chart that's going to blow you away. The market's actually increasingly getting hotter, and it doesn't do this. For the last 6 years in a row, the market's cooled week over week, and it hasn't done that this week. It's gotten hotter. So let's jump right into the next one, real-time market profile. This median list price, you can see, is $560. It was $489 on February 3rd. Juana, this is nuts. It's like $70,000 more median list price just from a few months ago.
Right. So for those people that are talking about median list prices being down, well, those that are talking about that, then they have to admit the median prices having gone up $70,000. So they've made $70,000 since January. We are now in May. So that's not a bad return on investment, right?
Now remember, that lags, right?
Right.
Okay, so price per square foot has gone up to $256 from $249, $7 a square foot. But we're going to see this number continue to rise over the next few weeks and months, right? Because the list price is a leading indicator.
It is. I don't know that we're going to see it rise really a whole lot more. We're already in the middle of May, so maybe another week or two, and then it'll start to kind of flatten out and then start to decline. Okay,
the next one here, inventory. For 1 week it went up, and it's been going down the last 2 weeks. We're down to 2,300 houses. This is a really super low number. It was 3,600 in February. The idea that interest rates would go up and home prices, or that the number of homes on the market would increase and cause a bubble, didn't happen, right?
No, it didn't happen, and the number of homes on the market is continuing to decline, and it probably will continue to do that until we have some sort of a change in interest rates in order to get those sellers off the fence and get them to put their houses on the market, which will add inventory. But remember, those sellers who put their houses on the market, they are also buyers. So that's probably going to be kind of an even swap. So it'll be interesting to see what happens with inventory, because we do need inventory. We do need people to trade houses, right? And we think that what will trigger people to do that is a drop in interest rates. But we'll see. I think at some point very soon, you're going to see sellers kind of throw their hands up and say, you know what, I'm going to jump anyway because the school year is coming up and we really need to get settled into a new house, into a new location.
Okay, Market Action Index, this is the chart of it. The 70 average is 49.91. It's almost 50. That is higher than all of 2019 and almost all of 2020, which means it's a hotter market today than all of 2019 and 2020.
It is, and we're not just talking about the temperatures in Vegas.
Yeah. The next one here, price per square foot. This is the one you looked at before. You can see price per square foot's up just from a few months ago. It was $249. It's $256. The 90-day average is $252, but the 70 average is the leading. So this shows prices in the future tending to go up, right?
Right. You know, we're not saying price will go up indefinitely. We're not saying price will even go up now. All we're saying is this is what the market is showing us today. You know, it is still likely that it will be a better opportunity for you to buy in the fall. However, things are kind of topsy-turvy, so I'm not as certain of that as I once was. So the seasonality of it, I think, is really up in the air for this fall. I don't know that this fall is going to behave the way it normally does.
I'm going to go back to the Market Action Index slide here. Mm-hmm. If you look at the bottom, it says the market continues to get hotter. Mm-hmm. More sales demand and fewer homes listed have contributed relatively longer of increasing prices. Current supply and demand levels show no signs of prices changing from their current trend.
Right. And remember, this is just looking at data, not looking at actually what people think, but looking at their actions, right? And actions, as we say, speak louder than words. So this is probably something to really consider as you're looking at these numbers, as you're looking at what you think these numbers mean going forward. Remember that going forward, we're just going, as far as this market update is concerned, we're just going week to week.
Yep.
And we do try to kind of give you a glimpse into the future beyond week to week. But for the most part, these are week to week trends.
Okay, the next one is median days on market. As you can see, it's declining substantially. The leading indicator 7-day average is way below the 90-day average. If you look at all of the last 5 years, they're pretty close or a little above, which means that the market is slowing. This is not. This is showing the market is continuing to get hotter and hotter, which normally doesn't happen this time of year.
No, it doesn't. But remember, a lot of the reason why this is happening is the low number of transactions we've had for the last few months. So because we've had such a low number of transactions, if you will, the season, the buying and selling season will probably be longer than usual because we've had so few transactions due to extremely low inventory.
Okay, speaking of inventory, here's the inventory chart. Now, if you look at this all the way to the right, the 7-day average is well below the 90-day average. It's showing that it's continuing to drop. It actually looks like it get down as low as it was in 2021 and 22 when we had the lowest inventory ever. But here's an interesting thing. If you look across the chart at all the dots and the little diamonds, every single other year, which is this exact week of those other years, inventory was starting to increase. The 7-day average was higher, which meant inventory was increased. You can see on the chart inventory is increasing, but it's still going down. It's the first year of the last 6 years. This late in the year, inventory is still declining.
Right, which again speaks to what I just said. We've had very few transactions this year, so the idea that we're going to have a longer selling season is probably reasonable at this point.
Median list price. Now remember, the bottom of this chart's not zero, it's 300,000, so it looks like a big dip there, but it wasn't that big of a dip. But what's interesting is the 7-day average is 560, the 90-day average is 527. That's a leading indicator. It shows that list prices are tending to increase over the next in the future. But what's really interesting about this is if you look at this is the highest split between the 7 and 90 day if you look back over. So it shows home prices accelerating at a faster rate than even they did in 21 and 22. Mm-hmm. If you read the little thing at the bottom, it says this week saw relatively little price change from last week. However, prices continue to demonstrate a nice uptrend over the last several weeks.
Mm-hmm. All right, so if you're a seller, you're still in the driver's seat.
And then this is the last chart we're going to talk about. This is the median list price broken up by market segment. Mm-hmm. The upper end of the market, which fell the most, which caused all these things that people were talking about. Oh, Todd, year over year and peak to trough price changes. It was mostly the upper end of the market that was making the market look terrible. Has bounced like crazy. It's going up like gangbusters. It was 895 was the middle of the top quarter, and it's 1.35 million now.
Right. So the thing to keep in mind about that is that the numbers on the upper end are they're a good indicator, but they don't really speak to the whole market. And what I mean by that is that there are a lot of upper end properties that never see the MLS. So if they don't see the MLS, then they probably do not show up on this chart. And you're wondering, well, what do you mean? Why don't they see the MLS? Well, they don't see the MLS because there are a lot of properties, a lot of luxury properties that are owned by people who do not wish to have their homes on the MLS. So these are almost private party sales. They are off-market sales, and they don't show up in these numbers. We do see them because we do that business, so we do see them. So what you see on this chart is actually very real.
This is the stuff in the MLS. But like Juan is saying, there are private party transactions where someone doesn't want their house listed. They're going to sell their $10 million house. They just want, someone to find me a buyer. I don't want people to know I'm selling it. I don't want pictures on Realtor.com or Zillow.
Right. No, and that's very, very typical. So what I want you to get out of this is, like I said, that when you see that bounce up in the luxury real estate market, it is a real thing. It is not just generated by one or two properties. It is generated by enough properties to make a substantial difference to get that uptick, and that there is support in the private market, so to speak, that supports those same numbers. so this is really interesting. It contributes to what we're looking at with the median sale prices, with the median square foot prices, because remember, those are some of the properties that significantly impacted the downturn in the statistics. So that's why we thought it was important that we brought that to your attention.
Okay, last thing, and then I'll let you wrap up the video.
Okay.
What is your opinion on why the market is so hot, inventory is declining, prices are still going up, even though we were told a year ago we were going to have a 40 to 50% crash? It's opposites happening, prices are going up. And why is this year hotter than 21 and 22? Like, what is causing all this, with interest rates being still above 6%, a potential recession, maybe a default on the national debt? Or you think people are just flooding into real estate because they just are tired of these other investments? Or what do you think is going on?
So I think there's a lot of pent-up demand. I think that's the first thing to address, is we have had a lot fewer transactions than we should have, which means that there's a lot of pent-up demand. It's getting spread out over a longer period of time. And because of the lack of inventory, whatever good inventory there is out there, it is getting purchased. Whatever inventory is lackluster, that's what's lingering on the market. But that's kind of what's going on. As far as what's going on with the national debt and the possibility of default, that's probably a conversation for another day. But the short answer to that is that it probably won't have a substantial impact on mortgages over the long term, possibly over the short term, because the market hates uncertainty.
Yeah.
We're going to see a lot of volatility. And the volatility is what kills all of us, right? Because that's not something we can count on. We don't know what that is, and that uncertainty is what makes everybody crazy. So that's kind of what's going on there. Look, there's so much pent-up demand on the sidelines. It's difficult for people to actually estimate that. I think it's easier for practitioners like us to estimate it than it is for people sitting there doing statistics to estimate.
Yeah.
Because they're not having conversations with people as far as how difficult it is to find a house, how much sellers really don't want to sell because they've got these great interest rates, and on top of that, they have nothing to purchase. Because remember, most sellers are buyers on the other end. They're not people who are going to go out and rent. So those are all things to keep in mind.
And the Crash Bros are just going to crank out housing crash videos. They'll be like 2040. 2040 is the year the housing market will crash, even though we've been saying that for 21 years. But this is the reason why this year it's going to crash, because the AI will crash the housing market.
There you go. The AI will do it all.
Oh, do you want to have them guess where we are?
Well, okay, it's getting dark, but if you can guess where we are, good for you. We'll let you know if you're right. And maybe at the end of our trip, we might even own up to where we've been. We'll see.
Yeah.
So we appreciate you watching. Please subscribe, hit the notification bell so you get notified of our next adventure and our next video. So we appreciate you watching. Please leave us comments. We do want to know what you think. Tell us what you think about the charts, what you think about the market, what's happening in your market. We love hearing about other markets. Look, we are not experts in every market. We are experts in the real estate market in Las Vegas, and we are knowledgeable about the national market, but that does not make us experts in your market.
Yeah.
And so we love hearing from you. You do not have to agree with us. We welcome all opinions. Subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.